Today I am going to do a tool called income statement and balance sheet. This has to do with how you look at your goals and your accomplishments during a period of time. I suspect, have goals that you have set for yourself, for your business, maybe for this year, maybe for this month, maybe even for just this week or day. These goals maybe are written down, and they are probably of varying nature of impact and time. I am going to categorize the goals or your accomplishments in the last month into two kinds of goals and accomplishments. I am going to call them income statement and balance sheet. Just to remind all of us, I am going to point out to you that, remember, income statements are dated for as income statement for a period of time. So, typically you date income statement by saying income statement for this quarter, income statement for this year. It is for a period of time. It is all the money that came in and all the money that went out during that period of time. In contrast, balance sheet is dated as of a point in time. So, for example, you might have a balance sheet as of the end of September 30th, 2012. Balance sheets are all the money, everything you own and everything you owe at that point in time. So, income statements is dated for a period of time, balance sheets are dated for a point in time. Why do I belabor this point? Because when you think about goals and accomplishments, you can think of them as an income statement accomplishment or a balance sheet accomplishment. An income statement accomplishment is one where the value of that accomplishment is received by the business over a period of time. And in that time, when the value is received, the value is consumed. In order, that value is only for that period of time. Next period, you have to do this all over again. So, for example, if you brought in a $20,000 order from a customer, fantastic, thank you very much. You brought in a $20,000 order. That's good for this period. Next period, you have to bring another $20,000 order in order for that value to be received. So, a $20,000 order that came in is an accomplishment for this period. It does not have any value the next period. These accomplishments are called income statement accomplishments, because the value is received and then such value has to be recreated in all subsequent periods. In contrast, if you were to create a new product development process, let us say we are going to create products faster. We have created a new process for developing products, and this process has been written down, people are educated in this process. The day the process was completed, you really did not get any value. Your value is going to be received in future times when you actually use the process to create products either faster or better or whatever. This accomplishment is a balance sheet accomplishment, because on the date you achieved this accomplishment, you really got no value. What you really received was an asset that you have on your balance sheet, admittedly non-financial balance sheet. It is an asset that you can use over and over again in perpetuity to derive value thereafter. Those accomplishments are called balance sheet accomplishments. Other examples of balance sheet accomplishments might be we developed new leaders in the company. It might be we moved a factory to a low cost operating country, and therefore in future years we will get lower cost of goods. These are all balance sheet accomplishments. Ask yourself, in your business, for yourself, the accomplishments you have set for yourself this year, are they income statement accomplishments or are they balance sheet accomplishments? The reason this is important is that further you go up in the hierarchy of an organizational structure, greater the responsibilities you start assuming, particularly CEOs and people who are close to CEOs. As you rise in the organization, you must focus more and more on balance sheet activities and less on income statement activities. The reason? Income statement activities can easily be delegated. It is better to delegate income statement goals rather than delegating balance sheet goals. There are two reasons for that. First, income statement goals are typically very definable. You can define what the objective is. They are typically measurable. You can say, this is what I want to achieve. In contrast, balance sheet goals are less definable, less measurable. Develop some leaders. It's a great balance sheet goal, but it's hard to define when you're done or how well you did it. It is easier to delegate definable, measurable goals than delegate less definable, more esoteric goals. So, income statement goals can be delegated easier than balance sheet goals. But a second reason, even more important reason, if you were to make a mistake by delegating an income statement goal to somebody who maybe isn't quite capable of discharging that responsibility, how much is the error cost you? Well, clearly that one period of time they didn't do the job well, but it is only a one-time loss. If you delegated a balance sheet goal to somebody who was not capable of discharging it, that error will now cost you forever in the future, repeatedly, when whatever asset they created is being used. So, the balance sheet goals and the errors by delegating them have an error that repeats in perpetuity. So, the cost of error in delegating income statement goals is much less. So, for those two reasons, A, it's easier to delegate, B, the cost of error is lower, you are better off delegating income statement goals and holding on to balance sheet goals. More of your time should be spent on the balance sheet goals. A lot of you might have heard a very commonly used expression, work on the business, not in the business. This is essentially the same concept, but explained using a more logical, rational way. The reason you should work on the business is because you're creating balance sheet assets. When you're working in the business, you're creating income statement accomplishments. You are better off working on the business because you're better off creating balance sheet assets rather than income statement accomplishments. Understand whether your goals are an income statement goal or balance sheet goal, and intentionally and proactively orient yourself to work more and more on balance sheet activities, income statement and balance sheet.